Good morning, everyone. Welcome to the modern market, where every day we discuss everything to do with the modern market. That is the crypto market, the NFT market, and how to make some or a lot of money on the internet. Loaded up for discussion today, we have Blackrock recommending a 2% allocation to Bitcoin. Meanwhile, state of Texas proposes a strategic Bitcoin reserve. We're also going to be talking about the ETH ETFs receiving a net inflow of $274 million yesterday. That's 10 consecutive days of inflows. And Avalanche announced another $250 billion funding round, which bolsters its $3 billion treasury. We've also got the latest on price action on crypto and NFTs, plus an awesome conversation with Mike, the CEO of Etherfi, which is the biggest liquid restaking protocol on Ethereum with $9 billion of TVL. Mike is the CEO of Etherfi, so we are very much looking forward to discussing both product and the business aspect of Etherfi's tremendous growth. So stay tuned for that. We've got Legendary up on stage as well. Bread can't be with us today, but we've got Mike on stage up with us too. How are you doing, Mike? Welcome to the stage with us. How are things on your side?
Things are great. Yeah, thanks for having me.
Great that you're with us. Cannot wait to get into the bigger interview a little bit later in the show. I'm going to spend a good 30 or so minutes diving into Etherfi's tremendous growth over the last year or so. But before we get there, just a reminder, friends, nothing that we say here, unfortunately, is financial advice. We don't know anything for sure. The market is exceptionally risky, so please do your own research and exercise your own judgment. With that out of the way, Legendary, how are you doing on your side? It is Friday. It's the 13th of December. We've got a good interview today. We've got a lot of interesting stuff going on in the market. How are you doing?
Jim, pretty excited for the show and the interview today. It's been a massive week. And I feel like for the last couple of shows, every show title, or at least one of the main pieces of news, was like something hit all-time high, something managed to hit the record high. So I'm quite happy that we have some other things to discuss and get into today.
I completely agree. Very exciting from that perspective. Also, genuinely, from the interview perspective, obviously, I prepare all of the interviews in reasonable detail beforehand. But Mike, we didn't get a chance to tell you before the show, Legendary and I were both Etherfi ambassadors before, like right at the beginning. We had to like apply on some Google form, and we thought like, we think this Ether restaking thing is going to be a big deal. Like, which of these protocols should we try to get involved with? And we both actually applied. Legendary got in before me because I forgot to do it.
Oh, that's exciting.
And then I had to apply later. But yeah, it's really fun to be able to ask you these questions, because they're like sincere questions that we have based on like kind of following the journey for a while.
Mm-hmm. Well, that's awesome. Yeah, I didn't know you guys were in the loop so early on. That's really cool.
Love it. So look, as I said, we're going to dive in with Mike a little bit later to get into all the details of how Etherfi has projected itself to the top of the liquid restaking industry. But before we do that, let's get into the crypto price action as always and the headlines. Starting with the price action, we have Bitcoin just flat on the day, still at a very nice six-figure round number, 100K. ETH is just down a touch, pretty much flat though, 3.9K, and Solana is down almost a couple of percent at $226. Just checking in on the meme coin side of things, we've got Doge still holding that 40 cents. That's where the support is. Pepe's down 3%, WIF's down 5%, Bonk's down 1%, Mog is flat, Popcat still at 120-ish. We've spoken about meme coins kind of maybe losing a bit of steam, but the AI stuff is still running. So you've got AI 16Z up another 14%, almost at 900 mil FDV. The AI coins, Fartcoin is up 35% as well. So the AI stuff is looking particularly strong still. Getting into the headlines themselves, we have, as we mentioned already, we've got Blackrock recommending a 2% allocation to Bitcoin. Meanwhile, the state of Texas proposed a strategic Bitcoin reserve yesterday. We'll dive into those details in a second. ETH ETFs received net inflow of $274 million yesterday, had 10 straight days of inflows. That's pretty significant. And then finally, Avalanche announces another $250 million funding round, which bolsters its $3 billion treasury. We've got some the headline information there coming up. Legendary, should we check in on the NFT market, see what is going on that side?
Yeah, absolutely. Let's take a quick look actually the first day where pudgies are not up, they're down 3%, but obviously still up massively, still up 37% over the week, still sitting comfortably at a 26.4 ETH floor. Very, very same for the entire ecosystem with the rods and the little pudgies as well. Bored apes, however, they are down another 6% over the last 24 hours, 18.34 ETH floor for them. Azukis are continuing the uptrend on the other side. They're very close to getting to a 9 ETH floor, up 3% over the last 24 hours, up 43% over the last week. So pretty impressive performance there. Milady's down another 2.6%, 5.8 ETH floor for them. And one collection we definitely have to bring up real quick are the on-chain heroes, the Genesis ring that minted yesterday for 0.2 ETH, went up all the way to 2.5 ETH and currently sitting at a 2 ETH floor. A gaming collection that is coming to Abstract, one of the flagship gaming projects to come to Abstract as the chain that is closely related to the Pudgy Penguin ecosystem. The impressive thing about that is not only that the floor price went up that high, did a 14.5x in a couple hours, but also this significant volume that we're seeing on this. Did 1,100 ETH volume over the last 24 hours or over the last 18-ish hours, because the collection's not even 24 hours old. And that is pretty impressive if you compare that to, say, the 24-hour volume for Milady, which is at 82 ETH, or Azuki's, which did 400 ETH in volume. So seeing that much excitement for a new collection, also that much FOMO because of the Abstract side of things and the Pudgy Penguin side of things, is definitely a nice sign for NFTs.
Like it. Very good stuff there on the NFT side. Very healthy activity. Just getting into the rest of the roundup to get you up to with everything else that's happened. Odos protocol announced an airdrop for former users who transacted. I think I'll be eligible for that. Definitely was using that back in the day. AI Launchpad Virtuals hits a $2 billion fully diluted valuation. That's pretty impressive. They've been building the AI stuff out very, very well, leading that sector. Superform announced $3 million raise led by VanEck to launch intelligent on-chain yield products. I think that's maybe VanEck's second investment in Web3. Fantasy Top announces V2 and a 4.25 million seed funding from Dragonfly and Manifold Ventures. That's a fun game that a lot of people have been very excited about. I think they deserve that well. Zagabond, Azuki CEO founder, created an AI agent which can send crypto to any ex-user without knowing their crypto wallet. I think a lot of people are going to be experimenting with this AI agent technology. So interested to see how that continues. As Legendary already mentioned, On-Chain Heroes was the big runner yesterday, was a 10x 0.2 ETH to 2 ETH. And Arbitrum and Ubisoft to launch a Netflix series inspired Web3 game. That is the rest of the news. Legendary, before we get into the main headlines, maybe just a quick point, and then I've got a quick question for Mike as well on what else is going on in the market before we get into the main headlines.
Fantasy Top News, definitely an exciting one to see, because once they announced the V2, once they announced some of the things that come out with that, it was pretty cool to see Zeneca, ICO, and so many other creators coming out and being like, this is one of the main Blast apps that they're still using, still enjoying that. So despite Blast not really being the talk of the town anymore, and that is against the positive price action that we're seeing for the token, it's pretty cool to see that Fantasy Top managed to sustain a very good user base.
Nice. I think that's definitely true, and they've definitely the winning app from the whole Blast ecosystem for sure. Mike, just wanted to come to you quickly before we get into the main headlines. How do you see this kind of activity on NFTs and meme coins? Obviously, you are very busy building a huge restaking protocol. I saw some of your tweets previously on meme coins. You had a pretty hot takes in that arena. What are your thoughts? How are you seeing that part of the economy moving?
I got, if I'm being honest, it's hard for me to get excited about meme coins. I've yet to see anything that's not just gambling, and it's just hard for me to get excited about just people, speculating and gambling on this kind of stuff. I think the counter argument that I've heard is that this is a sign of culture, and it's a way for people to have just a really simple, accessible way to get into crypto. But practically speaking, the vast majority of people lose money on meme coins. 1 or 2% of people actually make money, and they're usually sophisticated players that are able to front run or use analytical tools to try and predict price movements, or they're insiders. So it's hard to get excited about something where the vast majority of people lose money, and and the driver is like just purely speculative. So when you think about it, is someone who is gambling on meme coins really participating in crypto, or are they just playing in a casino?
Yeah.
As they would be in Vegas. So
Yeah.
I've yet to see anything truly kind of like culture or innovative come out of it.
Yeah, I get it. Like, look, I don't think we need to dwell on this too much. We've got so much other stuff to get into, but I definitely think one of the misconceptions with meme coins is that they're like so much more egalitarian in the face of all of the VC stuff, which is all insiders. And it's, I guess the point being, there are definitely significant groups of insiders on all of these things as well. Sure, it operates slightly differently, but don't be naive to think that there are not insiders in this game as either. I think that's the point.
Yeah, I mean, and even if it was egalitarian, do we really want to celebrate? Let's say there was an egalitarian lottery, right? Like, do you really want to celebrate people buying lottery tickets versus, let's say, productive activity and real value creation? I mean, there's nothing inherently wrong with gambling, I guess, but I don't know that it should be like really celebrated or conflated with with other aspects of crypto that I think are more productive and actually empower people and democratize access to financial services.
I think that's a very fair take, coming from someone who's actually done that and built something very significant, which we're going to be excited to talk about in just a little bit. Let's roll into the first headline then, because we're going to have to move fairly quickly to get you up to speed with everything that's happened in the past 24 hours before we get into that bigger conversation today on Etherfi. First headline is BlackRock recommending a 2% allocation to Bitcoin, whilst the state of Texas has also proposed a strategic Bitcoin reserve. These two things are unconnected, but I only connected them because they are both pretty bullish on Bitcoin. The three key points we're sharing on screen, the report, is it a report that BlackRock kind of published, or is just a short document? It's only 5 pages long. It's called An Investment Perspective, December 2024, literally published yesterday, I believe. I only would pick out 3 key points from it that I think people would be interested in. The first is, and Legendary, if you scroll to the first page where there's kind of an executive summary, the first is that they say the potential for future widespread adoption is, the potential for future widespread adoption is thus central to the investment case for Bitcoin. We believe it is the period leading up to large-scale adoption where the biggest future return potential could lie. They also say we see no intrinsic reason why Bitcoin should be correlated with major risk assets over the long term, given its value is driven by such distinct drivers. And they also say it could also become less risky moving forward, but at that point, it might no longer have a structural catalyst for further sizable price increases. So I think the general point here is the Bitcoin vision is kind of playing out in the sense that the major institutions are basically articulating that, look, the pre-broad adoption, this is where they, in their estimation, the biggest value appreciation opportunity exists. Whereas obviously once you wait for the asset to be far more adopted, the gains are kind of left to the people who got in earlier. So that's kind of what everyone who's holding Bitcoin has thought before. That's my key highlights here. Legendary, any thoughts on that?
Yeah, I think it's massive to have that. I think the key point for me is the traditional portfolio that they talk about: 60% stocks, 40% bonds, and having an 1 to 2% allocation to BTC in there, because this is exactly what could help to drive, well, the mass adoption, could drive price action over the next decade or so. If you think about how ETFs started and how basically it has become commonplace to have an S&P 500 ETF in the States, or have, maybe coming from a European perspective, more the MSCI World as the thing to invest in, despite it facing a bit of skepticism in the beginning, and having BlackRock as a 10 trillion asset manager come out and say, look, part of a good portfolio should be to have 1 to 2% BTC in there is a massive endorsement, in my opinion.
Yeah, I'll just touch on the Texas thing in just a little bit, but Mike, I'm curious to learn your journey in crypto before we get into the main interview later. But you're obviously building out on ETH at the moment. What's your view on Bitcoin as the core kind of crypto asset?
I mean, it's been remarkable to see just how much strength the original meme coin has. I've been historically a little bit dismissive of it, saying, look, it doesn't do anything. It's basically a technological dead end. The community is pretty toxic in a lot of ways. You look at the intellectual leadership of Bitcoin, to the extent that you can call it that. You've got characters like Michael Saylor and others who are just not good people. And so I've been pretty negative about it, but man, there's just so much power behind being the original token. And so I think it's important to look at it in the correct way, which is all of the narratives around what Bitcoin is are self-evidently wrong, right? It's not digital gold. It doesn't behave like gold in any way. It's not an inflation hedge. It's not a store of value. It's a speculative asset. It's NASDAQ beta. It's levered beta on NASDAQ. And as long as the market is riding high, as long as the money printer is still on, and the march towards the eventual collapse of fiat continues, it's probably going to appreciate in value. It's probably going to be a pretty good investment. But don't think of it as an inflation hedge or something that's going to protect you in the event of an economic crash the way gold would. Gold actually does hold its value, with the ups and downs of the market. So just understand it correctly and think about it in the right way. My personal preference, like I don't own any Bitcoin. My personal preference is ETH. The reason I like ETH is it's a productive asset. The ETH network has value because people are building lots of really useful stuff on Ethereum, and that through various mechanisms accrues value to ETH, the native token of Ethereum. One can make a case for Solana or whatever other L1s. I think ETH is probably the stronger asset. So that's why I prefer ETH.
I'm noticing a theme here,
I'm
Mike.
sure.
You like productive stuff. Meme coins, not productive. Bitcoin, not productive. ETH, productive.
Yeah, look, if you have a cash flowing business, I'd rather own a cash flowing business rather than something that everybody else is excited about and is appreciating value because of other people's opinions. Cash flows don't care about other people's opinions. Productive assets don't care about what people think about it. They're always going to have some value.
I like it. And we're going to be speaking more about your business in just a little bit. But since we've kind of turned the Bitcoin conversation into the ETH conversation, I already mentioned the Texas news, which people can kind of look up further, gave a little bit of that information. They've said the Texas lawmakers proposed a bill to establish a strategic Bitcoin reserve. So that narrative is just continuously happening now, it seems. But you mentioned ETH, Legendary, you're going to move into the next headline. Just a quick download on the ETH numbers, because the ETH ETF numbers have been pretty impressive the last 10 days, I believe, consecutive days of inflows. Do you want to give us a quick data download here?
Yeah, absolutely. A first post is coming from Wu Blockchain, saying that Ethereum spot ETFs had a total net inflow 274 million on December the 12th. So yesterday, consecutive 14 days of net inflow. If we head over to CoinGlass, we can take a look and see there's been some pretty strong days. 100 mil the day before, December 11th, 300, 149 mil, 80 mil, 430 mil. So that is quite some significant action on the ETH ETF side of things. One more point that I wanted to add to that is taking a look at Arkham, that blockchain wallet explorer, taking a look at Donald Trump's or Donald Trump associated wallets. You can also see that Trump's holdings allegedly are very strongly skewing towards ETH, with almost 500 ETH and another 480 ETH as wrapped ETH in there. And there's also been this interview that Trump gave where he was basically talking about his future vision for crypto during his administration and kind of reinforcing all the bullish points that he made before, and adding to that he wants to move fast with crypto and AI adoption from the perspective of the USA, because they want to be faster than China. They want to be faster than other countries who might want to join in on that race. So all of that together probably is a good explanation as to why we've seen the ETH ETF inflows catching up over the last week or two.
Yeah, if people didn't see that clip, it's a clip from him speaking at the stock exchange yesterday. It's just wildly bullish. Like they're just being very, very open about how bullish they are on crypto. As Legendary said, like, look, they want America to be the best place for crypto to be, for the crypto industry to flourish. I think that is the main point. Mike, I'd be fascinated to hear your opinion on this. Like, obviously the regulatory and the regulatory environment in the US seems to be on the cusp of like huge change. I'm not sure exactly where you guys are based, how you've been navigating that up to this point. What's your kind of reflection on this kind of the change in presidency, and then therefore what that means for the industry itself?
So I mean, it's obviously hugely positive, right? Like that's self-evident. I think it's very likely that we're going to see all of these prosecutions and persecutions of good actors in the space probably stop. I mean, we saw the last couple of years, you know, you had all the good actors like Coinbase and Uniswap and Kraken getting attacked, while, you know, all the sketchy players were seemingly getting away with it. So I mean, it seems like that's coming to an end. I mean, that's going to be remarkable. I really think that's going to open up a lot of innovation and bring a lot of these crypto companies back into the US. So that's super bullish. In the long run, I actually don't think it matters that much. Honestly, I think like I tend to look at things 10, 20 years down the road. What happens in the next 6 months or a year, honestly, is very unpredictable, and it's usually not an effective strategy to invest or plan or do your work thinking about trying to time yourself, you know, within the next couple of months. I just find it very hard to do that. So I just focus on 10 to 20 year timeframes, and over the long time frame, long-term time frame, I don't know that it matters that much whether it's Trump or Kamala or whoever else. You know, we are headed towards this infinite spiral of money printing and inflation that Trump is probably going to exacerbate because he generally tends to be less fiscally responsible than even Democrats. Ironically, I mean, he was a Democrat, right, for most of his life. So the reality is the money printer's back on, and it would have been on whether it was Trump or Kamala or whoever else. And the end game is still very much the same. You know, however you end up playing it, probably being holding hard assets rather than fiat, and being more risk on over the next few years is probably the right strategy. But hey, you know, not investment advice.
As always, not investment advice. I think ultimately we were of the same opinion pre-election as well. I do think there was like this big sigh of relief and kind of this unlock of perceived freedom that now people can operate in. But like with the longer term view, in the end, this thing is kind of inevitable. That was kind of our view.
I mean, it is. I don't know that anybody, even the most you know, pro crypto, kind of wildly optimistic people, predicted that you'd have the elected president of the United States shilling, frankly, shilling a DeFi project, right? And you know, participating in ICO and like talking about a strategic crypto reserve. Like that's nuts. I mean, I don't think anybody had that in their bingo cards. The question is how. Here's okay. I hate to be the kind of the realist or negative, you know, guy here, but like,
I want to hear it.
Like, why is Trump doing this? Well, it's because crypto helped him get elected. I don't know that he would have gotten elected without crypto. Obviously, Elon was a huge help, but there were a lot of factors coming in. But crypto helped him get elected. You know, there were a lot of you know, single issue voters, and I think it was the biggest PAC that threw tons of money at him. So the question is, right, if the tide suddenly turned, maybe there's a big scandal or whatever, like, is he the type of guy that's going to stay loyal and like keep his promises, or is he going to like immediately flip and, become anti-crypto? Like, that's not hard to imagine, right? Imagine some, I don't know, whatever. One of the projects that supported him turns out to be a big scam. It's not hard to imagine him turning on a dime, right? He's done that before. So just be cautious, right? Like it's very easy to be super bullish and not believe anything could go wrong. That's why I think playing for the longer term time horizon and not worrying too much about the intermediate term price movements is the right approach. I've always said if I was to give financial advice, the right approach is probably buy some ETH or whatever your favorite Lindy token is. Put it in a box and close your eyes for 10 years. That's probably you're probably going to do better with that than anything else you do with active trading.
I like it. One of the things that you said, which stood out to me, and then I was conscious of it as I was saying it, was that basing your investment decisions on people's opinions is maybe not as good a strategy as if you're when you're talking about like productive assets. And I was conscious as I was saying, like, this is what Trump thinks, and therefore the market just moves in these incredible ways. And it's like, well, that's what he thinks today. I guess what you're posing is that that might not necessarily be the case, that the way that they think moving forward. So I think it's a fair question and a fair risk to just kind of flag to people as we're going into an environment which people are expecting to be hyper bullish. So interesting insights there. Legendary, any final reflections before we move into the interview for today?
Nothing to add to that. Let's get into the interview section since we're running a bit late either way.
Excellent. Let's do it. So, I mean, if you didn't know already, the person who's been up on stage with us so far is Mike, who is the CEO of Etherfi. Etherfi is the biggest liquid restaking protocol on Ethereum. It's the largest liquid restaking protocol on Ethereum with $9 billion of TVL, more than $7 million more TVL than its nearest competitor, Kelp, according to DeFi Llama data when I was checking this morning. Mike has not only overseen the liquid restaking growth, which in essence was Etherfi's first product, he's also established a second product, Etherfi Liquid, where you can automate your earnings with ease via strategy vaults, and their third product, Etherfi Cash, which allows you to borrow against and spend your Etherfi balance in the real world. He's also successfully launched the Etherfi token with his team, which is valued at $2.7 billion fully diluted today. In this conversation, we'll discuss Mike's history and his reasons for embarking on the Etherfi vision, the 3 Etherfi products and why crypto needs them, and look forward to what his plans are for Etherfi in 2025. Welcome again, Mike. Great to have you with us to have this conversation. Before we maybe get into Etherfi itself, I wanted to ask you, just maybe take it back. Like, why did you decide to start Etherfi? To give our listeners and viewers some context, when was that? And tell us how the product turned into this $9 billion protocol.
So we started about 2 years ago. Yeah, I mean, it's been wildly successful. I don't know that anybody expected things to really blow up the way they did. So yeah, so it's been about 2 years ago. The ultimate vision of Etherfi, what we're trying to create, is a crypto alternative to banks. So what we want in, let's say, 2 to 3 years time, is to have millions of people who have abandoned their traditional financial institutions, that abandoned that abusive relationships, and have switched over to Etherfi for all of their typical needs, and provide a self-custodial crypto native solution that lets them save, deploy their capital, and spend it, use it in real life. And that maps to our 3 products, so which are Etherfi Stake, Etherfi Liquid, and Etherfi Cash, that help you save your crypto, hold it, earn a little bit of rewards on the asset through staking, deploy the assets into DeFi through our liquid vaults, and then use your crypto in real life with Etherfi Cash and our wallet and credit card.
You mentioned there, I've got a bunch of questions on all the products. We're going to do the product stuff in just a little bit. We'll stay in the history part for a little bit longer. You mentioned the kind of abusive relationship that people might have had with banks. What was the kind of inspiration there? Had you gone through anything in particular? What are the things you're seeing in the traditional banking system that was so infuriating for you?
I mean, I think like so many things, it's a mixed bag, right? In a lot of ways, it's easy to, especially if you're in, in North America, you're in the US or Canada or whatever, and you've got your banking app and you just do your day-to-day stuff. It's easy to believe that it's not that bad, right? You've got your checking account, you're able to send small amounts of money. But the problem is if you step anywhere outside of that very narrow zone, you end up usually in a pretty bad place. So for one thing, obviously you're not getting nearly the kind of return. You're getting no return on your assets when you hold them with the bank. The bank internalizes all of that. The bank takes tons of risks with your assets. Those tend to be kind of abstracted away from you, and usually, the bank screws up and gambles it on mortgage bonds, and interest rates change, and suddenly they lose all your money. Then the government comes in, fills the gap and calls it a day. So those types of wild risks are hidden and abstracted from you in what's fundamentally kind of a broken and corrupt system. There are endless fees that you end up paying that maybe you don't even notice, you don't even realize that you're paying. You're blocked from you lose access to a variety of investment opportunities that would otherwise be pretty lucrative, and those investment opportunities are instead only available to a very select group of either high net worth individuals or financial services firms. If you try to send money to anywhere outside of a very small circle or outside of a very small range of numbers, I mean, it's either impossible or incredibly painful and expensive. I mean, I could go on and on, right? Like I'm not telling you anything you don't know here. Yeah, I mean, it's frustrating, and it's frustrating because these aren't like physical limitations. These are things that are just driven by kind of the nature of the system that we're in, and it fundamentally is a violation of human rights. Like, you shouldn't have to get permission and have to pay exorbitant fees in order to send someone a small amount of money. And so that's what crypto really enables. That's where the alternative that we're trying to create, which is a self-custodial system that gives you all the same freedom and flexibility that you want, but in a way that you actually own your own assets and you're able to control them and get access to a variety of opportunities. So
I love it.
That's why it matters.
Yeah, it makes so much sense, and that I'm sure that'll resonate with a lot of the crypto native people. So that's the vision, and I think that all makes a lot of sense. You obviously need to try to make it happen as the founder, and we have many entrepreneurially minded listeners. So I think maybe the funding topic might be interesting. In May 2023, you raised 5.3 million in the depth of the bear market. It included some notable funds, including Maelstrom, family office run by Arthur Hayes. You wrote a candid opinion piece, which I found earlier today, on how to raise a VC round in the bear market, which I'm showing on screen now. It includes lessons like never do cold outreach, do not drag your raise out over months. Why do you think you were so successful back then, and which lessons kind of stand out for you now, looking back?
That's so funny. I have no memory of writing that that blog. So
it did happen. April the 7th, 2023.
Oh man, yeah, that was a while ago. Yeah, the two things you mentioned are good. It's good advice. So at least I said some things that made sense. Why were we successful? I mean, I think there were a couple things. I think the two drivers were, one, the fact that I have a track record. So I had started another business prior to this called Top Hat, which was pretty successful, and so I mean, that brings a lot of credibility with it. It's certainly more challenging if you're just starting out and you don't have any kind of track record. But yeah, if you've done it before, you have a network and you have a lot more credibility. That was probably a big driver. And then the other thing is, around that time, if you recall, I think either that was right around the merge or right around the time that withdrawals were getting enabled on Ethereum, staking withdrawals. And so there was a lot of excitement and hype around staking. So I think just being in a category that was pretty interesting, where there was a lot of excitement around, and having a track record were big unfair advantages, I guess, that that helped us succeed, among other things, like, I guess, let's say some of the advice.
Sure. I love it. We talk a lot about actually unfair advantages on the show and just like trying to figure out the way to leverage your specific one. So I'm glad you mentioned that. Maybe a final question on the history before we move into the product. I think one of the biggest questions in crypto, and this probably applies not only to teams looking to attract TVL, but probably applies in some other ways. That's probably one of the biggest questions, right? How to attract TVL. You have more than anyone in the liquid restaking market at 9 billion. How did you do it? And how have your big depositors' demands maybe changed over time, if at all? Was it harder at the beginning? Is it harder maybe to keep people now when, as you say, there's like a broad casino going on everywhere else where they could take their capital? What are your thoughts there?
Um, I mean, it's such a challenging question. I think there's no one sort of one size fits all answer to how to attract TVL. It depends on the specific protocol, depends on the market, and you need to be sort of wildly creative and relentless about it. What we did, back when we were starting out, there was no points meta. Points was just not a
Okay.
thing that anybody was doing. Um, whatever you want to call it, whether it's credit or blame, I think we were largely responsible for like all of this points madness that we're now experiencing with protocols. We were one of the very first ones to do it. We were the first ones to do it in DeFi. And that, I think, was, I mean, the market was heating up. So, I mean, it would have heated up anyway, whether we did it or not. But like, that was like gasoline and cocaine and crack all, mixed into one, poured onto the market. It obviously, like, in collaboration with Pendo, which that was, that was like napalm and fentanyl or whatever. I don't know.
I'm hearing a lot of dangerous
Whatever
substances here,
drugs.
all getting
Yeah.
mixed together.
It was just, I mean, that was just really an accelerant to the whole thing, and then the market just absolutely exploded because it created like a whole new speculative kind of mechanism. So that's one of the reasons I think we were very successful, is we had this crazy idea. And why did we have this crazy idea? Well, because the SEC was going after everybody for any kind of token launches, and so we were very we wanted to be very careful to say, look, we're not going to, we're going to do it right. And so we came up with this crazy idea of loyalty points. And it was a way to kind of be a little bit defensive and careful about what we were putting out there. And it just like it grew into this beast that I think ultimately is actually a better mechanism for rewarding users in a more transparent way. I actually, as much as people bitch about it, like, I do think, like I said, it's a better mechanism because the protocol can very clearly reward users and tell them, hey, this is the specific thing we want you to do, rather than just show up and and hope something happens if there's a TGE.
I like it. I think that is probably the thing that people point to most. And I agree with you. I think is really important. The other thing which you kind of touched on, which I wanted to bring to people's attention too, is you mentioned the collaboration with Pendle. But I think the other thing that you guys have done really well is like the relentless number of integrations and collaborations. So like if you log into Ether.fi, you'll see so many collaborators where you're like earning extra Ether.fi points. So it's like, yes, the points, but it's also like working with people to be integrated into that ecosystem.
Yeah.
And then people feel, right, I can actually get points in so many different ways here. So I thought that was pretty cool as well.
Yeah, that was part of it for sure. I mean, we wanted to make sure that our staked asset was in everywhere, in everything, and so we were, relentless about making sure that we got integrations into absolutely every protocol. We actually we had this view that not everybody agreed with, but I think turns out to be correct, which was like, it's not even about the TVL that the integrations drive. In other words, you think, okay, you get an integration and you do it because it's going to get another, whatever, 100 million in deposits. But if you look at the 300 or whatever it is now, probably more different integrations that we have, the top 2 or 3 are basically all of the TVL. Like you look at Aave, it's bigger than everything else combined. I think it's like Aave, Pendo, and couple others. So the vast majority don't drive a lot of TVL, but what it does is just it embeds us in the ecosystem, and it creates almost like a mini Etherfi billboard all over crypto Twitter and over other protocols. And so it's really more like we viewed it as a marketing channel. Just the more integrations that we could get, the more embedded we could be in other projects, the more awareness and reach we could have. And so we were absolutely relentless. I mean, we were doing sometimes 10, 15 integrations a week. And that was and the points mania was obviously fueling that. So so that was very successful, I would say, as part of our growth strategy.
Like it. I'm conscious of time. We've only got 12 or so minutes left of the show today. So I want to ask about product, and then I want to pass over to Legendary, who's got some questions on the token and how, what people can expect moving forward. I think, Mike, the best way to do this is the liquid restaking product's been around for a while. Let's maybe park that. The two newer things that are interesting to me and maybe interesting to the audience would be the liquid product, where you can automate your earnings by depositing them into these strategy vaults. So maybe like the first question there is, can you speak to what that means for users, why they might want to deploy their ETH into the strategy vaults? Are there benefits? What are the risks? And then maybe separately, the Etherfi cash. In fact, I'll come on to that in a second.
Yeah, so the liquid product, it was our second product that we launched. I mean, I think it's pretty awesome. So if you have things to do in your life and you don't want to micromanage your DeFi positions, the liquid vaults basically automate that for you. So you can just deposit your ETH, your BTC, or your USD, and it gets diversified automatically in a non-custodial way across a variety of different DeFi strategies, and earns points and rewards across those. I think historically, if all you did was take your ETH, put into the liquid vaults, you probably would have done better than almost any other strategy. Anything that you would have kind of done yourself without the work. And so it's just a great option. I mean, I'm obviously pretty DeFi native. I like to, play around with stuff. But to me, I mean, the liquid strategies are like the godsend. I love it. All my assets are in there.
Immediate follow-up to dig into the details. We do have like quite a lot of sophisticated participants as well, probably listening in. Like, how do those strategies get selected? Like, is there any transparency of it? How do they get selected? What's the due diligence been done to know that that's kind of being executed in a decent way?
Yeah, for sure. So we're working with a number of players. Typically, with each vault, there's a couple of people and a couple of entities involved. There's Etherfi. There is Veda that controls it deploys the strategy smart contract framework that then has connectors to different protocols. And then there's a strategy manager that selects the different strategies and manages them. So all the strategies are audited, typically multiple times. There's monitoring that's in place to ensure, if something does happen, that assets are pulled and stay safe, or contracts are paused as needed. And the specific strategies that are running on each vault are transparent public. You can just go to the vault page, and it shows you exactly what the strategies are and how much allocation they receive. And the reason that it tends to work out well is because a large percentage of the strategies are these bespoke deal structures, I guess, that are struck. So one of the, for example, ones that we have on the liquid vault is Eclipse. So there's just a bespoke structure there that you wouldn't be able to get as an individual if you just went and deployed assets onto Eclipse. And so there's a bunch of those where you're getting the benefit of a scalable vault that is deploying on your behalf, so such that you're getting rewards that otherwise would be hard to get. And as I said, if you take into account all the points and rewards that you're getting, plus the actual built-in yield, you end up having something that's just, as I said, better than probably anything you could construct yourself. And it's diversified. I mean, there's value in the fact that it's spread across a lot of different things. You're not putting all your eggs in one basket.
Got it. Interesting. I wasn't aware of that second part that you mentioned, that you can get exposure to something that you wouldn't ordinarily be able to do. So that's very interesting. On Ether.fi Cash, want to give you a chance to speak to that. That's pretty cool. You obviously, this bigger vision is to disrupt the traditional relationship between consumers and their banks. I guess this is your attempt to connect crypto with the real world. Why did you design the product in this way? What's the reception been?
Yeah, so Ether.fi Cash is actually launching in 7 days to the first group of customers. We've been using it internally. So we have our Ether.fi cards. We've been using it day to day, make sure transactions work, the cashback is being received, everything is working. So we're very excited to do that. If you want to be one of the first people, then you can go Ether.fi and pre-order your card. The sort of, if you think about our suite of 3 products, the way to think about it from the user's perspective, which is really how we built this thing, is you start with, all right, I've got a bunch of assets. I want to hold ETH or BTC or USDC or whatever. What can I do with that? Well, you can stake it and earn some rewards. You can analogously think of that as like you're earning the native interest rate of the ecosystem. Great, you're staking it, but now, what are you going to do with that staked asset? Well, you can deploy it in DeFi and take additional risk, but earn higher yields. That's the liquid product. Great, now you've got your portfolio number go up. You feel great. Okay, what do you do with that? I mean, you want to be able to actually do something with number that has gone up, and that's what cash is. This actually lets you do something. It lets you go and spend that money. It lets you either borrow against your assets and then have a self-repaying loan where you borrow your assets. The interest that you're paying on the assets is lower than the rewards that you're getting on your assets in Ether.fi, and then the loan kind of gets paid down over time. Or you can just directly spend your stables on the card, whether that's yield-bearing stables like Athena or SUSD or whatever. Or just vanilla, USDC. You can now just spend those and get 3% cash back on everything, plus 5 to 10% cash back on travel and hotel stays. So it's great. So you now have this suite of 3 products where you never have to off ramp. You can just live your life in crypto, spend your money. We're going to have IBAN and Swift integration soon that allows you to send and receive fiat directly into Ether.fi. So it really is going to be a viable alternative to dealing with traditional financial institutions.
I love it. The lack of needing to offboard, or I think it's always been a pain in people's side. So that sounds
it's a nightmare. I mean,
pretty exciting.
Everyone goes in crypto and DeFi goes through this thing where like the off-ramping dance where like, all right, I take my crypto, send it to an exchange, pay like 30 bips to sell your crypto for fiat, send your fiat to some custodian, then the custodian send it to a bank, take it from the bank, put it in your credit card or whatever, or wire it somewhere else. It's this multi-day process. It'll cost you tens or hundreds of dollars, depending exactly on how you're set up, and it fucking sucks. Nobody wants to do this stuff. This lets you skip all of that, don't pay any of the fees, plus you get crazy rewards. It's just 10 times better. I mean, it really is going to be the best, not just the best product for crypto. It's just going to be the best product, full stop. I mean, it's going to be better than any neobanking offering that's out there.
Exciting. That's definitely why I wanted to learn more about it on today's show. Look, I'm very conscious of time. Just got a few minutes left for today. I want to pass over to Legendary, maybe ask you a quick question on tokenomics, and then we'll wrap it up and kind of ask what there is on the horizon. Legendary.
Yeah, definitely want to touch on the token because it was such an interesting situation that you found yourself in when the token launched. You had massive attention on the team, on the protocol, because it was basically a new category coming out way before Eigenlayer came out with their own token. you had this interesting situation of, I think it was Justin Sun coming in a couple of days or weeks before the launch, depositing a very, very significant amount of money that ultimately made you adapt the tokenomics to that extent that I think part of his airdrop was subjected to vesting. Then there was, again, a lot of attention, a lot of eyes on that. So what was the experience of launching the token? What were some of the biggest challenges with that? How did you, experience that process?
I mean, honestly, our token launch was remarkably smooth. We actually, yeah, Justin Sun was great. Yeah, he made a huge deposit. He's still in. In fact, they doubled down since then. So that's been great. Our token launch and our TGE was, I would say, pretty well received. It was. I hope I'm not being too arrogant by saying this. It was kind of like the Etherfi drop. People were pretty happy. Then there were a whole bunch of token launches that like everybody was grumpy about, and then there was hype where everybody was happy. So there's like this, these two milestone markers. Where two token launches that went pretty well. We, just to be clear, we made no special exceptions or whatever special deals or anything with Justin Sun. Like his allocation was the same as anybody else who would have deposited at the time. So yeah, we have a relationship with him, and he's been great to work with. But yeah, there was no special treatment of any kind. Everybody was treated the same way. So everybody who received above 25,000 ETHfi was subject to vesting. So that wasn't unique to Justin or anybody else. But yeah, I mean, look, I think the reason our token launch was pretty well received is, first of all, we dropped a large amount to the community. Like, it was a good size drop. In aggregate, I think it was like close to 20% that we dropped to the community, which is pretty good, pretty good size. And frankly, probably more since then, because we've continued to roll out incentives. We were super fair, transparent. We didn't do anything sketchy. There wasn't anything with most token launches, like there's something that don't go well. There's something that happens that creates a lot of drama. Like, we just did it in a very straightforward way. So I don't know, and it seemed to have gone well.
Yeah, fair enough. Look, keeping the time in mind, just a question on a different topic, not on the tokenomics anymore. You have the 12 days of Hayes going on right now, referencing Arthur Hayes as your prominent investor. Lots of rewards going on and going out on X. What's the deal with that? How can people participate in that campaign if they wanted to?
Yeah, it's such a fun campaign. We have a dozen different partners. Each day there's a new set of partners. So if you have any deposit in Etherfi, just literally go to Etherfi and every day click and claim your prize. Every day you're going to get a new prize. It could be some points. It could be dollars. And the first day we did $50 of INST tokens. So literally just show up every day and get a prize. And if you do additional deposits, so anybody that mints new ETHfi or EBTC or EUSD, probably a bunch of other assets. Oh yeah, the Symbiotic and Karak tokens, you're going to get a share of $3 million of ETHfi that we're dropping at the end of season 4. So it's great. It's a super fun campaign. I mean, Arthur's awesome. He recorded a really hilarious clip for us, and he's been obviously helping promote the campaign. So just come on down. It's super fun. It's honestly, it's probably one of the most fun, hilarious campaigns we've done.
Gotcha. Love to hear that. One final question. What's something that Etherfi users can look forward to in 2025?
So the Etherfi Cash Card, I think, is going to be a huge growth driver for us. I mean, our goal is millions of users. We think we can get millions of users. And the power of that is that it's not going to be the usual sort of crypto speculative kind of nonsense thing, but this is going to be real economic activity, people who are using the card in real life that feeds that economic activity, a portion of it, back into the crypto DeFi market. So it's truly this exogenous source of economic activity and revenue that's feeding back into DeFi. One of the first ones that I'm aware of that actually does that. And if we can get billions of dollars in transaction volume, feeding back into crypto, I really think that's gonna move the market. So that's what I'm most excited about. And as I said, what we're going to be doing is IBAN support, SWIFT support. We're going to have a corporate card program so your company can sign up, and will allow us to issue cards more broadly across a lot of different regions. It's going to be awesome. I'm super pumped about it, and it's just a great product. Honestly, I love using it every day, and I think people will too.
Love it. That's awesome, Mike. Thanks so much for sharing all that information. I actually didn't know. I knew this 12 days of haze was going on. I didn't know that there was literally things I needed to go click every single day. So I'm going to need to do that.
Yeah, every day go click, get your prize.
Okay, need to get back, log in and do that, because I've got, I think, still a pretty significant amount with you guys. But Mike,
Nice.
Thanks so much for joining us. It's been a great conversation. I hope that is helpful for people who are listening in. Obviously, one of our intentions always is to bring on the best founders in the crypto space for a live, unfiltered conversation on the things that they're building, their history, their inspiration, any of their motivations, and like the discussion on the challenges that they face and how they ultimately are able to succeed in encountering those challenges. So it's been a great conversation today about Etherfi. Do check it out. I've got it shared on the screen. 12 Days of Haze, an initiative where if you deposit anything immediately, you will start to earn a bit of a share of the next drop of Etherfi. Mike, thanks so much for joining us. Take care, man. Appreciate you joining us.
Great. Thanks, guys. See ya.
Thanks. A reminder, guys, we do this every single day, Monday to Friday, 7 a.m. Eastern time for 1 hour. We're live on X video, and YouTube as well. We also publish to Apple and Spotify podcasts if you prefer to consume media that way. Have a wonderful weekend. We will be back with you on Monday. Take care and bye-bye.